Hey there, everybody. My name's Allison Ostrander. I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to walk through a potential trade idea on Meta for their earnings announcement. Now, please take note that their earnings is not until tomorrow after market close, which also happens to be tomorrow after the Fed announcement. And so this isn't a trade that I would put on today. I would wait closer into the close of market tomorrow, and I'll talk about why. But let's go back and take a look at the chart. As you can see, Meta has a really good probability of getting some sort of volatile gap move on earnings. At least that's how I typically play it in the past. And most of the time, this trade strategy usually works out in my favor. As you can see, 3 times we've had strong gap moves. This one, we had a bit of a gap move as well, and then it continued to trend up. And so the idea is to take advantage of the high probability that we are going to get some volatility. And so what I typically look to do is, in the case of Meta with how it's priced out, I normally look at a buy to open iron condor, or what some other traders call a double vertical spread, where I buy one debit spread on the put side and one on the call side. The reason why I do this is because I have no idea which way this is going to gap, right? Last earnings, it gapped down. The earnings prior to that gapped up. We had another gap up here, and so on and so forth. So because I don't know which way it's going to move, the only thing I know is that there's a high probability of getting some volatility or a gap move on the announcement. I look to play both sides. And I look at the anticipated range over here for the weekly expiration, which of course encompasses earnings. And right now it's about a $44 to $45 move. Then I take a look at where the underlying price is at, currently at 672 and change. So right by our 672.50 strike. And I'll go 44 points higher, which will take me over here to around 716. So let's just call it, actually, let's go in a strike set. So the 712.50, 715 strikes. If we move 44 points up from where we're currently trading at, we know that this spread would be completely in the money. And then, of course, we do the same thing to the opposite side. 44 points down, roughly, would put us right around this range here. So in this case, we'll actually go with the 636, 27.50. And so now, as you can see, the cost basis on this trade is about $1.20 for both debit, put, and call vertical spreads. The profit potential is about $1.30, $1.35, depending on where you get filled at. So a pretty even risk versus reward. But once again, I wouldn't put on this trade now. I would wait closer into the close tomorrow before doing that. And the reason why is, one, Meta in general could move more than what we've seen today, right? It could drop down 10 points. That's easily within Meta's, daily range. And that means our strike set would be a little bit different than what it looks like today if it's still an anticipated move of 44 points, right? We would want to adjust these 10 points lower on each side, so that way it's right in range with the anticipated move versus where the underlying price is trading at. And of course, not only could Meta in general move tomorrow, but we have the Fed announcement, which of course, depending on what happens, right, and how the market reacts to it, can cause volatility in individual names like Meta. So if we're trading at, let's say, 650 tomorrow, then I would go 44 points off of the 650 up and down to create these double verticals. Or if we're trading at 700 tomorrow, once again, I'd go 44 points off 700 to put on this trade idea. But the thought process around this, once again, is to play off of the high probability that we will get a volatile move off earnings, and in turn can see one of our spreads either at or ideally completely in the money. That's what we typically see whenever trading this strategy around earnings, and allow us to take a quick win the next day. Now, keep in mind, the other side of this is if earnings is a non-event for Meta, then this trade is 100% going to lose because the premium crush on it is going to take out all the value that we have on these two vertical spreads, right? So please keep that in mind. Keep your risk on the smaller side for earnings. It will end up being a coin toss whether it works or not. But because Meta has a high probability of getting those gap moves around the announcement, I like the idea of doing like something like this to hold from tomorrow into market close into the next day and see what happens after market close with the announcement itself. Thank you all so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time.